I don't know. Maybe I should just start OnlyFans. It's probably going to be it. Oop. All right. G'day guys. So the most popular topic I get asked questions about at the moment is stuff relating to shares. So what I've done is I've compiled I don't know how many questions are here, maybe 30 of the most popular questions I get, and I'm going to go through and answer them for you. Where do I go to stand in the room and yell at the screen? That's the New York Stock Exchange, and they don't really do that much anymore because it's all digital. But if you want it, you can go there and do that, I guess. How do I get the yacht with all of the models on it? Well, you have to have a lot of shares, and all the shares have to pay you a lot of money. Or you have to be a white-collar criminal. Either. How do I know if my shares will lose value? What do I do? Okay, I'm going to split that into two questions. How do I know if my shares lose value? Well, at some point, your shares will probably go down. That's just the nature of things. The share market is basically like a big engine where people guess the prices on stuff. So some days people might not like your company as much as they liked it yesterday, so the price might go down a little bit. But the thing is, right, the price of your shares only matters when you sell it. Do I need to look at my shares every day? No, not unless you're trading them all the time. In fact, it would actually be better if you looked at them twice a year because you're less likely to do something silly and panic. So if you're buying just stable shares, just buy them and forget about them, and they'll send you a check twice a year. What do you mean they'll send you a check? What's the check for? Okay, so because you're a part owner of the company, you're entitled to part of the profits. So what that means is every time a big bank or a big grocery chain makes money and reports their profits, every shareholder gets a little bit of profit called a dividend. So the idea is you keep accumulating shares and they keep paying you more and more and more and more dividends till you just live off the dividends, and then you can get on the yacht we talked about before. What do I do if the share price drops? Nothing. Don't touch them. The share price will go up and down over time, but it doesn't really affect you on a day-to-day basis. The only time the value of the share affects you is when you go to sell the share, because then you do what's called realizing the value. So basically, if a share is worth $20 and it's sitting in your account, that's fine. You can't do anything with it. If you decide to sell the share on the day when it's $15, you've lost $5. But if you just hold on to it forever, it'll slowly on average tick up and up and up and up. How does a company end up on the stock exchange? Who decides if they list or not? Well, generally a company itself will decide they want to go on the stock exchange, and they'll do what's called a prospectus or an IPO document. This is like a big report that they send to all the investors and all of the regulators and say, hey, I want to go on the stock exchange. Here's what I want to do. What do you think? Who values the company to figure out the price of the shares? A lot of people. So initially, the company basically puts a document together called a prospectus or an IPO document, and they say, we want to raise $100 million and we want to give this much of the company up, so we think the company is going to be worth $200 million. And they send that to the regulators, they send that to some banks, and then they all look at it and they go, yeah, that seems about right. And that's how they proceed. Or they say, no, this is preposterous. We're not giving you that much money. And then they have to go back and change everything. Can I buy US stocks if I'm in Australia? Yes, you can. But the only problem you'll encounter if you buy US stocks is all of a sudden you have to factor in owning overseas shares in your tax return, which becomes a nightmare. So if you're just starting out, I probably wouldn't start buying overseas shares. I'd probably just buy local shares. However, there's a thing called an ETF that can give you access to them. What's an ETF? Okay. So an ETF is like a thing called an exchange traded fund. I'm going to do a whole video on ETFs in the future, so let's not get too into it. But basically, an ETF is a company on the stock market that's set up, and they say, all we're going to do in our company is buy US shares and look after them for you. So then rather than you, the end user, having to try to figure it out, you just buy shares in this company that's an ETF, and they manage all of that stuff for you. If you really, really want to get into an overseas share market, that's probably the way to go. So there you go. I hope I've answered some questions for you about shares. If you want to ask me any more questions, just find me on Instagram at MoneyCatLovesYou, or Twitter @MoneyCatLovesYou, and send the questions through. And I'll try my best to answer them and not be rude to you if I think they're dumb.